Hey, welcome back. Now that I know that at least a few hundred of you will watch this, I can cover more or less well-known companies that I really like, starting with Adecoagro. They manage almost 500,000 hectares of land in Argentina, Brazil and Uruguay. They make money from sugar, which they can sell as is or transform into ethanol depending on what's more profitable at the moment, plus farming various crops and dairy. Adecoagro has pretty much all the storage capacity and processing plants that they need, and overall they are reusing a lot of what they produce. This is a very circular, flexible and low-cost business model that you don't really find anymore with bigger companies. They had a record year once again with double and even triple-digit increases in pretty much everything while also reducing the net debt. Keep in mind that they do a lot of adjustments because of inflation and exchange rates and stuff like that. Plus, in the cash flow, they also include interest and lease payments and investing, so the adjusted free cash flow is like the truly free cash that they have. They have 1.05 billion in current assets, with about 340 million of it being in cash and current liabilities of close to $500 million. With the 1.4 billion in non-current liabilities covered by the 2.1 billion in non-current assets, most of them being in property, plant and equipment, they are doing very well from a financial point of view. The current market cap is a bit below the equity, so that adds a bit to the margin of safety. The maturities of the debt are also not even close to being an issue. Maybe only 2024 will result in less money, but they can afford it, and this year will reduce the debt by a lot. After finishing a 5-year investing plan a couple of years ago, the capex normalized and the company actually started to grow. They also began paying a dividend and doing buybacks, representing a minimum of 40% of the adjusted free cash flow from operations, meaning a dividend and a buyback yield of around 3.2% each. In the agriculture industry, at the moment, this is among the biggest returns you can get. And again, they pay less than half of what they make. Something very interesting that I noticed a long time ago, the CEO, who's also a co-founder, has been refusing the cash and stock-based compensation in every year that I checked. You know, in time, that's millions of dollars that he decided to keep in the company and allow it to develop into a billion-dollar company today. He owns about 1% of the company, by the way, but in hundreds or maybe even thousands of companies that I analyzed, he's probably the first and only CEO that I've seen doing that. On average, this management team has been in the company for about 20 years, and the company was founded 22 years ago, so these people literally grew together with Adecoagro. Now, the countries they operate in, other than environmental risk, also come with political and economical risk, and in the past we've seen some very significant taxes for Adecoagro in Argentina. However, the current politics in these countries are actually not that bad for the company, and the recent change in Argentina can even be an opportunity. Now, there is good potential from carbon credits, which they get in Brazil since a couple of years ago. They are actually among the first or even the first in Brazil to do it. Simply put, this is a mechanism where if you as a company want to pollute, you have to offset this pollution. You do that by buying these credits from companies that absorb that pollution. This basically encourages investments in the second type of company. In Brazil it's a bit different, we have credits in Europe and the US as well, but in Brazil it's more about fuel companies. The government is supporting it because sugarcane and ethanol are pretty much the equivalent of corn in the US and are very important for the country, but more on this in a bit. The price was very volatile, but overall it's up quite a bit since the beginning of the program. This is a green trend that might eventually become more and more popular the closer we get to the net zero targets. For Adecoagro, this is literally free money for doing what they already do. They have very green operations, so they are able to get quite a few credits which add to the company's average profit throughout the cycle. And on top of the potential for the price of credits to go up, Argentina joining can add even more money. The CBIOs are a thing only in Brazil, so if they get some from Argentina, that can add another 5 to 10 million, which for a company like Adecoagro is a lot of money, especially since it wouldn't depend on the commodity cycle. But you know, at the end of the day, it's politics, so it's unpredictable, but this would be a good development for Argentina. And that's not the only green trend that can help Adecoagro. There is also potential from ethanol. Ethanol can be mixed with gasoline to improve the renewability and reduce the emissions of classic gas. Plus, it's used in beverages, sanitizers, solvents and a bunch of other chemicals. Compared to corn, which is huge and kept alive in the US thanks to massive subsidies, ethanol made from sugarcane is 5 to 7 times more efficient. When you talk about sustainability and carbon footprint, this is even more important, and in the future there is potential to see more and more ethanol being required in gas to reduce emissions. Now, this is wishful thinking, but if the US eventually encourages some other crops and maybe there is a change in policy towards corn, this can be very beneficial for the price of ethanol. Biofuels and the usage of ethanol should also be beneficial for Adecoagro, and we've seen companies like Stellantis recently invest in biofuel tech in South America. By the way, this company is actually among the leaders in sustainability, and this is exactly what I want from an agriculture business. My worry about the farming industry, well, it's a positive overall but not very good for the current companies, comes from vertical agriculture. It's a simple concept that's not really new, but it started being adopted a lot more recently, and it has a lot of advantages. You don't care about the elements, it doesn't matter if it's sunny or rainy or a dry season, which affect Adecoagro on a regular basis. Not only that, but it's much easier to control and reap, plus virtually no pest or disease. Theoretically, you can have this even in the middle of the desert, which would solve a lot of our current issues. Instead of planting horizontally and taking a lot of land, you stack up and go vertically, hence the name. Imagine these 10 or 20-story tall buildings in the middle of the city providing all the fresh vegetables and fruits needed, maybe even cheaper than the traditional ones. Now, why aren't we doing this? Well, we are, but we are not at the point where we do this for crops and things that Adecoagro produces, but certain fruits and vegetables are already there, only not at a large scale yet. As for valuation, let's look into 3 scenarios to get an idea about them in each part of the commodity cycle. We don't know how much they can produce on average since the investing cycle and carbon credits, but keep in mind that they kept and keep growing even when the price of commodities went down. In a negative scenario during the downside, if they make around 75 million and the market is trading them at only 6 times that amount to be more conservative, that's a market cap of 450 million. That's a price of around 4.26, so a loss of around 60%. By the way, in this scenario, the market cap would be pretty close to the company's cash. Now, can it happen? Yes, this is a commodity stock, and even if the company has much more potential now, we've seen such a price even 4 years ago. As a parenthesis, I bought a lot when it dropped to that price, and if I see it back to that level, I'm definitely going to buy again. In this scenario, for the current price, the dividend and buybacks should reach around 1.3% each, but for that price they would be close to 3.5% instead. In a second scenario, around the average of the cycle, let's assume they make 150 million. For a ratio of 8, that's a market cap of 1.2 billion, so pretty close to the current price. The dividend and buybacks could reach around 5% together, which is similar to other companies in the industry. In a good scenario, they could reach maybe even 300 million, but let's say 250 instead. For a ratio of 10, that's 2.5 billion and a price of 25.58. That's over a 2x from the current price, and in this scenario they could pay over 8.5% if I buy today. However, if I keep buying around 5 or 6, this can pay me even 20% in dividends and buybacks, plus the potential for a 4 or 5x. And again, with carbon credits and the potential of ethanol, this can do even better. For me, 4 or 5 would be an amazing price, but even 6 or 7 should be good. I think the current price is okay for the company's capacity. Comparing them to ADM, for example, you basically get the same dividend, more potential, and overall a much better company with exceptional management. Not to mention that they don't have a history of doing shady stuff. For ADM, that dividend is a very significant issue because in bad and even normal times, it's not sustainable, and if they cut it as a dividend king, I think, the stock is destroyed. Adecoagro has a target based on the money they make, and until a couple of years ago they didn't even want to pay a dividend. And that's a key difference between a company that cares about being a dividend king to attract people and boost the stock price and consequently the management's compensation, and a good company. I'd say this is probably my favorite investment, and it's definitely something that I want to hold for decades ahead. Good financials, nice dividend, great exposure to vital commodities, very profitable and very nice versatility. The management is also among the best I've seen, and they really developed the company a lot following the previous investing cycle. I think for me this is a prime example of a value investment. I started buying this when they were about to finish the big investing cycle and also during the beginning of the pandemic. Now, after even tripling some positions in a few years, they pay me a very nice dividend on top of the good long-term potential. I always wanted to talk about this company, but working 20 plus hours on a video just to get 50 views a while ago wasn't really worth it. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out, and make sure to subscribe. Thank you for watching, and I'll see you next time.